Welcome back to Explain the Charts. Today, September 22nd, 2025, we're embarking on a deeply analytical journey to provide you with a comprehensive and in-depth examination of ETHUSD, meticulously incorporating both the very latest market news and granular chart data. Ethereum is presently a vibrant hub of intense activity, fueled by significant and escalating institutional interest, coupled with a series of highly anticipated upcoming network developments, all collectively positioning it for potentially dramatic price shifts in the foreseeable future. Looking at the broader market landscape, we've encountered numerous reports emphatically highlighting that Ethereum ETFs are continuing their impressive surge, with sustained capital inflows driving a clear and widely discussed trajectory towards the $5,000 psychological mark, a robust price target consistently echoed by many prominent crypto analysts across the board. This undeniably bullish sentiment is largely, and quite powerfully, attributed to increasing traditional finance adoption, powerfully exemplified by Grayscale's strategic initiatives, which include extensive preparations to stake substantial Ethereum holdings and the recent SEC approval of their groundbreaking multi-asset crypto ETP, broadening market access. These impactful institutional moves collectively signal growing confidence and a deepening integration of cryptocurrency into mainstream financial products, acting as a massive and sustained tailwind for ETH's valuation and market legitimacy. On the crucial development front, Ethereum's core developers are rigorously working towards implementing the highly anticipated Fusaka hard fork, a pivotal upgrade currently scheduled for December 3, 2025, a date quickly approaching. This transformative upgrade will introduce 12 Ethereum Improvement Proposals, EIPs, aimed squarely at boosting the network's scalability, significantly enhancing its overall security protocols, and critically, substantially reducing transaction costs, all fundamental aspects for achieving wider mass adoption and utility. Furthermore, Ethereum co-founder Vitalik Buterin himself has recently emphasized the compelling and innovative potential for low-risk DeFi protocols to generate stable and recurring revenue for the network, drawing insightful parallels to how Google Search efficiently generates revenue for Google's broader ecosystem, highlighting a sustainable economic model. We also witnessed massive and coordinated on-chain activity around September 11, 2025, when major corporate treasury companies like Bitmine, Immersion, and SharpLink Gaming reportedly executed substantial and very well-timed ETH purchases, showing strategic accumulation. This significant institutional buying spree directly followed encouraging U.S. Producer Price Index, PPI, data, which revealed inflation had notably cooled to 2.6%, a key macroeconomic signal that often prompts increased allocations to growth-oriented assets like crypto as investors seek returns. Bitmine Immersion alone now proudly boasts impressive holdings of over 2.1 million ETH, valued at over $9.2 billion, while SharpLink Gaming's Ethereum treasury stands robustly at $3.6 billion, unequivocally demonstrating serious conviction and long-term belief at these current price levels. However, the market's journey hasn't been a completely smooth ascent. It has experienced periods of intense volatility, evidenced by over $32.86 million in liquidations for traders and sharp ETF outflows observed in late August and early September, highlighting periods of increased investor caution and risk aversion. The U.S. Securities and Exchange Commission, SEC, continues to exert a significant and watchful influence, with a notable delay in their ruling on BlackRock's plan to incorporate staking into its Ethereum ETF offerings, injecting a degree of ongoing regulatory uncertainty that all astute traders must meticulously monitor for future implications. Finally, in a strategic and carefully planned move to fund ongoing ecosystem initiatives, the Ethereum Foundation itself has disclosed plans to convert approximately 10,000 ETH into fiat over several upcoming weeks, executing these transactions via small, measured orders to carefully minimize any significant adverse market impact, showcasing responsible treasury management. Now, let's turn our focused attention to the daily chart for ETHUSD, a macro overview that visually encapsulates the entirety of the price action from May 2024 through the current date in September 2025, providing essential historical context for understanding current dynamics. From a macro perspective, we can clearly identify a significant and powerfully sustained uptrend that initiated robustly from the mid-2024 lows, systematically propelling prices from around the $2,000 to $2,500 range, marking a strong and confident market recovery. This powerful upward trajectory eventually culminated in a notable peak closer to $4,900 in August 2025, representing a substantial capital appreciation for long-term holders and a key psychological resistance level that attracted considerable attention. This overarching bullish trend aligns perfectly with the prevailing backdrop of increasing institutional adoption we just discussed, and the pervasive growing optimism surrounding Ethereum's future ecosystem enhancements and expanding utility. Observe the pronounced and decisive surge experienced in early November 2024, a clear breakout that propelled ETH to new intermediate highs and vigorously captured considerable market attention and trading volume, signaling a shift in momentum. This energetic move was subsequently followed by a period of healthy and necessary consolidation, characterized by sideways price action, primarily within the $3,000 to $3,500 range, which is often a natural and beneficial reaccumulation phase before the next significant leg up, allowing the market to absorb gains. Following this consolidation, Ethereum successfully broke out higher in early 2025, marking another significant milestone in its continuous journey of price discovery and market expansion, building on previous gains. A particularly notable peak was registered at $4,889.80 on August 12, 2025, which, as widely reported in the news, was a tantalizingly close brush with the highly anticipated $5,000 psychological mark that many analysts had actively set as a short-term target, emphasizing its strong upward potential. Following this strong but ultimately unfulfilled attempt at $5,000, the price entered a discernible corrective phase throughout late August and into early September 2025, shedding some of its recent impressive gains as profit-takers emerged. This recent pullback directly correlates with reports of temporary ETF outflows and an overall increase in broader market volatility during that specific period, powerfully demonstrating the underlying market sensitivity to larger capital movements and shifts in prevailing sentiment. However, the subsequent sharp and decisive bounce from the early September lows, specifically around the $4,200 area, pushing prices robustly back above $4,400, correlates directly with the news of massive institutional buying by Bitmine and SharpLink, which was decisively triggered by the positive US PPI data. This compelling pattern clearly indicates that strong and consistent institutional support consistently emerges whenever prices dip to these critical levels, powerfully reinforcing a deeply embedded bullish outlook despite short-term pullbacks and fleeting market jitters, strongly suggesting long-term conviction among major players. Now, let's step back to early September 2025 and examine the one-hour chart to understand the intraday volatility that preceded the mid-September institutional buying spree. Here, you can see a period of significant price fluctuations and a lack of clear direction, with ETH moving within a broader range. Specifically, from September 1st to September 4th, Ethereum experienced several attempts to break above $4,400, but these were consistently met with selling pressure. Notice the relatively lower volumes accompanying some of these intraday rallies, indicating a lack of strong conviction from buyers during this period. This early September choppiness is precisely what market reports described as a wide consolidation zone following the August highs, testing bullish momentum. The inability to sustain gains above $4,400 during this time highlights the prevailing uncertainty before the fresh institutional capital inflows began to assert their dominance later in the month. This hourly view offers valuable insight into the struggle for market direction and the cautious sentiment that characterized Ethereum in the immediate aftermath of its August 2025 peak. It underscores how quickly market sentiment can shift with macroeconomic news and significant institutional actions, paving the way for the later rebound. Let's now transition back to the daily chart and narrow our focus to the most recent few months, specifically from July 2025 to the present day, to pinpoint the most crucial immediate support and resistance levels for ETHUSD, which are absolutely essential for making informed and active trading decisions. The immediate overhead resistance for Ethereum is clearly defined by the price zone around $4,700 to $4,800, a formidable and well-tested level which ETH has struggled to decisively breach and consistently hold above during its various attempts in August, indicating strong selling pressure there. A significant and demonstrably strong support level has effectively emerged around the $4,200 to $4,300 range. This particular zone is precisely where we've consistently observed robust institutional buying interest stepping in vigorously to prevent further price declines, establishing it as a key floor. Tom Lee's recent widely cited prediction of ETH holding firm support at $4,300 is notably reinforced by the precise and validating price action we've observed in the charts. Strongly indicating this is a critical and currently well-defended floor for Ethereum's present valuation, offering a reliable entry point for bulls. Furthermore, the psychological $4,000 level acts as another extremely important area of interest, and should a deeper and more pronounced correction unexpectedly unfold, it potentially offers attractive and strategic buy-the-dip opportunities for astute long-term investors seeking value. From a technical perspective, a sustained and truly convincing breach above that $4,900 mark could act as a profoundly powerful catalyst, potentially opening the doors for a rapid and accelerated ascent towards the $5,000 target and even significantly beyond, aligning with more aggressive and optimistic analyst price predictions. Conversely, should bearish pressure intensify significantly and overcome current buying interest, a clear and sustained break below the $4,200 support would undeniably signal a major and concerning shift in market momentum, potentially leading to a retest of the next significant technical support zone around $3,800 to $3,900, which holds historical importance as a previous accumulation area. Now, let's zoom in even further to the 15-minute chart, meticulously examining the last few days from September 19th through September 21st, 2025, to dissect the intricate short-term trading dynamics and capture the granular, minute-by-minute price movements that dictate intraday strategies. On this highly granular time frame, we vividly observe Ethereum oscillating within a relatively tighter price channel, predominantly trading between $4,450 and $4,500, clearly indicating a period of pronounced intraday consolidation, a common and often telling occurrence before larger, more decisive moves take shape. The trading volume on this shorter time frame, while naturally not as massive as the broader daily surges, has nonetheless remained consistently healthy and robust, suggesting active participation and a visible tug-of-war between determined buyers and sellers even within this narrow, constrained price range. This specific short-term pattern could very well indicate a developing Bollinger Band squeeze, as thoughtfully mentioned in some recent market reports, which is often interpreted by technical analysts as a precursor to a sudden and potentially explosive price move in either direction, strongly demanding vigilant traders' attention. For astute traders keenly looking for optimal short-term entry or exit opportunities, it is absolutely crucial to meticulously watch for a decisive and convincing breakout above the $4,500 resistance, especially if it is powerfully accompanied by a noticeable and sustained surge in trading volume, validating the move. Such a breakout, if truly sustained and confirmed by follow-through, could signal a rapid upward continuation, potentially targeting higher intraday resistance levels and catching unprepared short sellers off guard, leading to a quick cascade. Conversely, a sustained drop and close below the $4,450 level would indicate immediate and pronounced bearish weakness, potentially leading to a swift retest of the stronger $4,400 support zone that we so carefully identified on the longer daily chart, confirming a downward bias. The continuous and sometimes choppy fluctuations, combined with the tight range-bound movement within this consolidation, also present viable opportunities for nimble scalping strategies, though these inherently carry higher risk due to the rapid and often unpredictable price reversals typical of such compact trading periods. The immediate short-term outlook therefore appears delicately balanced, with the market patiently awaiting a fresh and impactful catalyst for its next significant directional move, which could originate from sudden news headlines, broader macroeconomic shifts, or major institutional order flows, all impacting the short-term trajectory. So, meticulously pulling all these intricate threads of news, fundamental developments, and technical chart analysis together, what does this comprehensive overview truly imply for Ethereum's trajectory and potential future performance going forward? The bullish case remains exceptionally robust, primarily underpinned by persistent and undeniable institutional interest. This deep-seated interest is vividly manifest through consistent ETF inflows and the massive corporate treasury purchases we've highlighted earlier, unequivocally signaling that deep-pocketed institutional players are actively accumulating ETH for the long haul, indicating strong foundational demand and conviction. The upcoming Fusaka hard fork is not merely a routine technical update, it represents a foundational technological leap, promising significantly enhanced scalability, improved security protocols, and, importantly, substantially reduced transaction costs, all of which will fundamentally bolster Ethereum's long-term utility and overall value proposition, making it more attractive. Therefore, the widely discussed and often ambitious analyst predictions of ETH not only reaching but comfortably surpassing $5,000 and even beginning to gain ground on Bitcoin in terms of market dominance are highly credible, powerfully backed by this continuous traditional finance adoption and the impressive suite of ongoing ecosystem improvements. On the flip side, we absolutely cannot afford to ignore the recent periods of high volatility, coupled with some observed whale activity indicative of strategic profit-taking, and the sharp ETF outflows witnessed throughout late August and early September. These factors collectively underscore the market's inherent sensitivity to rapid short-term sentiment shifts and highlight potential areas of vulnerability that could lead to corrections. Furthermore, the ongoing regulatory uncertainty surrounding the cryptocurrency space, particularly regarding the SEC's delayed decisions on allowing staking within spot Ethereum ETFs, could temporarily temper broader market enthusiasm and introduce cautious trading behaviors, potentially slowing any upward momentum. For active traders, the immediate technical resistance to surmount with confidence is located around $4,500, with a more substantial and formidable technical barrier existing at the $4,700 to $4,800 zone that ETH has struggled to penetrate decisively in recent weeks, indicating heavy selling. Looking downwards, critical and well-established support levels are firmly in place around $4,400 to $4,300, a key psychological and technical area where buyers have consistently stepped in aggressively, forming a strong base. A decisive and sustained break below this primary support could signal a major and concerning shift in market structure, potentially leading to a retest of $3,800, or even further declines towards $3,500 if broader market sentiment deteriorates rapidly and selling pressure accelerates significantly. Considering the current tight price consolidation around the $4,450 to $4,500 range, a definitive breakout in either direction from this narrow channel is a high-probability event in the very short term, demanding exceptional vigilance and readiness from traders. Long-term, provided institutional adoption trends continue unabated and pivotal network upgrades like Fusaka are executed smoothly and on schedule, the potential for Ethereum to not only revisit but decisively surpass its August 2025 highs and push well beyond $5,000 is highly likely, with an estimated 70% probability by the end of 2025. However, should significant regulatory headwinds materialize, such as an unfavorable SEC ruling or an unexpected, severe downturn in global macroeconomic conditions occur, these factors could pose substantial challenges, making a sustained drop below $4,000 a plausible, albeit less likely, 30% possibility in the short to medium term, necessitating risk management. As we move forward, market participants should diligently monitor all forthcoming ETF inflow and outflow reports and pay keen attention to any further official pronouncements or pivotal decisions from the SEC concerning staking regulations, as these will be absolutely crucial indicators for Ethereum's next major directional move and overall market health. Remember to stay informed, adapt your strategies, and manage your risk effectively, because in the world of crypto, knowledge is power. Thank you for joining us on Explain the Charts for this in-depth analysis. We'll see you in the next video.